You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Marchese, mining analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, Chris.
Great to be back, Jim.
Well, first off, we're going to be talking about U.S. economic data. The U.S. dollar has been doing well recently, but now it has dropped a bit, and maybe this is one of the factors why. What can you tell us about the latest U.S. Economic numbers?
Okay, well, I'll just start with the most recent data that was released 2 days ago, the durable goods orders and the new and existing home sales. Durable goods fell 1% year on year, but over 6% versus November 2013. And even if you take the volatile aircraft number out of the equation, it still fell 3.5% since November. So taking out the most volatile component, you still got a large decline. And so new home sales, those did increase year on year at 2.2%. But it's still down 65% from the pre-recession levels in June or July of 2005. But what more than negates that is existing homes for sale fell year on year 5%. So that was pretty bad. And then we all kind of knew after Yellen talked yesterday saying weather probably impacted the U.S. economy, and knowing that the GDP number was due for release today, and she obviously said that because she knew it was going to be low, or if it was higher, she wouldn't have said anything. Anyway, it came in at 2.4%, and forecast was for 3.2%. So that's quite a bit off, and of course that's so-called due to the weather, even though this has been a bad winter, but these are seasonally adjusted numbers. So either way you look at it, it's still misguidance. And you have to remember that healthcare spending surged, and that is part of Obamacare. So getting it implemented and such. So some of that growth is artificial from the 2.4%. So, things continue to look dismal. You and I have talked, we've been saying the same thing since midsummer, and, why would things get better? They don't have policies enacted to encourage that. So that's pretty much all the economic data in the last 2 days, but that's still, quite a bit of more, really bad economic data that we've just seen continue.
Are they going to continue tapering with the quantitative easing, reducing the amount spent on it every month?
I think they might do one or two more tapers, but I think that there'll just be $5 billion reductions in treasury buying, as they think that mortgage-backed security purchases have a bigger impact on keeping interest rates low across the yield curve.
Chris, doom and gloom perhaps in the U.S. economic numbers, but there are some areas where things have been improving, the mining sector and also precious metals. What's happening in mining right now?
The mining stocks continue to be on fire. Like I said a few weeks ago on your show, they tend to lead the precious metals, and it looks like we're headed higher before, let's say, at least summertime. Maybe say to $23, $24 silver, maybe even $25, and maybe probably push $1,400 gold or even break that level.
And the reason why?
The bad economic data continues to make China buy more and more. They see things aren't working. The pace of buying just continues, relatively at the same pace it did in 2013. And if this keeps going, it's going to put a real squeeze on the physical market.
On the price of gold.
Yeah.
Well, China, as you said, bought up all the new gold produced last year, and it looks like they're going to do the same this year?
Yeah, they have actually started importing some in the latest report I read, which is, consistent with what they've been doing. Not exporting an ounce and actually importing gold, even though they're the largest producer of gold. And it really has to do with the U.S. debt situation. We're stuck between a rock and a hard place. We can't raise rates because of servicing government that's debt. It needs constant debt financing. Yet we need that in order for the economy to pick up, to encourage savings and capital accumulation. So things are looking good on that front. Same with we just finished a couple studies, and we summarized one of them in the latest issue of the Morgan Report with PGMs and palladium. Palladium looks poised to just go up significantly over the next several years, including this year, due to a combination of supply side issues. I mean, worldwide annual production is somewhere around 7-8 million ounces, and you get 3 or so from recycling. And as we talked about, China passed pollution controls, which will require the use of catalytic converters in all cars by the end of 2017, as I understand it. And so we should start seeing an impact reflected in the price second half of 2014, as people want to get ahead of that and not wait till the last second.
And of course, air pollution in China is so bad right now, it's considered to have taken about 6 years off the average life expectancy. That's how bad it is right now.
Yeah, that doesn't surprise me. And, you have to remember that the auto ownership mirrors that of the 1920s U.S. That few people own a car.
And they sell 50,000 a day.
Yeah, exactly. So, I mean, imagine we're already in a supply deficit for palladium. We entered it last year, and it's looking to increase, for the foreseeable future. So, I really think that the price between platinum and palladium will narrow quite a bit from here.
Plus, they have to use platinum for catalytic converters as well.
Yeah, well, see, that's the thing. Newer technology has made it so the interchangeability between platinum and palladium is 1-for-1 now, instead of 2-for-1, which it used to be for platinum versus palladium. So you could have a catalytic converter with no platinum in it, or very insignificant amounts.
So palladium seems to be the way to go right now.
Yeah, that and the fundamentals for uranium look very strong. Japan will be starting up a couple reactors sometime this year, and then you got the China demand in the longer term to support that. And as you probably had guests on your show say before, there's a big discrepancy between the spot price of uranium and the long-term price. Spot's around $35 a pound, give or take. And, I see companies making long-term contracts for uranium at $55, $60 a pound. So that should definitely close, and I'm guessing it'll start this year. And uranium could easily move up to $100 per pound, before the end of the decade. So there's quite a bit going on in the commodities sector. Although, like you said, the economy is doing really just pathetically, and that's putting it nicely. So, although, the stock markets are holding up, at least in the U.S., the stock market indices, I think the S&P hit a new high yesterday, but a lot of that is due to because there's so much excess liquidity, and, the valuations are absurd. If you take 10 random companies in S&P or Dow, and the only thing that looks cheap, like Doug Casey said, is the mining stocks.
The only place you're going to find a bargain.
Yeah. I mean, you can buy some companies out there for 10-20% of net asset value, even at if you're using even a $13.50 price tag for gold and $21.50 price tag for silver. So,
well, Chris, well, at least in the mining sector, things are looking up, but for everybody else, it looks like hold on to those shekels you have, because they could disappear quickly.
Well, it is about time because it was just horrible for the metals last year. It was just nonstop. Oh, it was brutal. I'll just leave it at that.
Thanks a lot for chatting with us, Chris.
Yeah, my pleasure.
My guest has been Chris Marchese, mining analyst for the Morgan Report, which you can find online at silver-investor.com. You can send questions to Chris at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can forward comments to info@HowStreet.com. I'm Jim Goddard.
Silver123.net is a silver saver program designed to be as simple as possible. For as little as $50 per month, you can set up and create an automatic cost average buying program that will get silver or gold sent to your door on a monthly basis. The first step to creating an account is easy. You will supply some basic information. Next, you will add a bank account from which you will schedule your purchases. Scheduling purchases makes saving easy. Silver Saver is customizable and allows you to control the amount and the date of purchase. Once you are signed up, you are then given your affiliate code. Now you can save in precious metals and also market this program. You can use email, web pages, and multiple forms of social media to share the Silver Saver program. Silver Saver will reward you generously with physical silver or gold whenever someone you refer becomes a saver. Silver Saver not only provides you with a share code, but also allows you to place your own banner ad on a website of your own. Silver Saver is one of the best ways to start saving and accumulating gold or silver, especially at these levels. Visit silver123.net and start saving today.